Hi everybody, it's Mark here at Teslary, and Tesla closed green once again, and that was a $276.04 closing price, which was a share increase of $4.74. In percentage terms, that's 1.75%. Now, this is, I guess, a good gain in light of the fact that producer price index was higher for the headline. Core was in line, so you can kind of understand that maybe people are really just looking at core. You can kind of see that in how CPI was received, that everyone was expecting energy costs and fuel costs to be higher. That was confirmed in CPI yesterday, and it's also just confirmed by just going to the gas pump for the last 3 months. We were talking about this in June and July, where I kept saying all the time when it came to thinking ahead for inflation reports into the fall, that all of these increased fuel costs are going to catch up when it comes to like a month-over-month rate change, and we're seeing some of the highest rate changes since last year or even beginning of last year. So I guess you can perceive that as bad. When I think about headline inflation, I think about that's the inflation number that makes the headlines for the news. And it kind of is right, because that's what you're feeling right now as a consumer, as just an average ordinary citizen of some country. If you're in America, you were seeing fuel costs go higher for the last couple months. And so, but it's so obvious though, right? It's so obvious. And so that's why I think that when I was talking about inflation from the past weekend, I was like, okay, headline's going to disappoint you. But what really matters is core. And if core can just keep falling, which is technically falling still, and even on a short-term rate, like let's say over the past 3 months or the past 6 months, like core inflation is getting to the point where those shorter time frames are averaging around anywhere from low 2% to mid 2%, with the overall target being a 2% rate by the Fed. I mean, this depends on your time frame, but year over year, yeah, I think we're going to get down to there, sometime within a year from now. But if you just look at the progress is being made in shelter especially, and that's really, really good for not just you and me, but it's good for how the Fed is going to perceive the need to increase rates. And from the looks of it, and even the biggest banks in the country are saying, their analysts are saying to them, there are just no more rates for this. There's no more rate hikes for the cycle. And I think eventually, when most people start kind of agreeing with that perspective, I think you're going to see some type of rally in the markets. Now, I'm not saying it's going to happen. That this is, of course, something that you need to do research for yourself. But to have, this is typically the weakest month of the year. I mean, to the point where it's actually more likely to be a very bad month compared to any other month in the calendar year. And this is for based off data for the past 100 years, going back to the beginning of the Dow. So, but the thing about it is, if the bad performance is kind of front loaded into the beginning of the month, kind of we had that really the doldrums of August, it kind of creeped into the beginning of September. There's data that says, it's if you front load the rough patch in the beginning week or two of September, that you actually see a performance about 1% of a gain by the end of September. Now, 1% doesn't seem like a lot, but if you do 1% a month, that's 12% for the S&P 500. That's an amazing gain for most people. You're beating the treasuries by double, right? So it's just something to think about as you start absorbing all the economic data that is coming out. And there's really not much more to go before FOMC next week. And we're not going to hear from the Fed speakers until that moment as well. And I can't really think of anything of a catalyst for the market, other than other foreign markets influencing our price action. That's going to really affect us until maybe the middle of next week. Now, of course, there's always some type of event that can happen. We still have a couple of details for the economy coming out tomorrow, especially consumer sentiment. I believe that's going to be at 10 a.m. So that's really typically violent, but otherwise, what I'm hoping for is a vacuum going into FOMC. And when there's the vacuums of data, usually the price action is going to be more, how do I say, organic. But anyways, let's look at Tesla real quick. So Tesla is really creating this level for itself. And you can kind of see that respected in a certain way with today's price action. And that level is $275. As the morning started, and we kind of had this, I don't want to call it I don't really want to call it a sell-off, but kind of a retracement that would have kind of closed the gap on the day. So I think it's a really healthy move. Close the gap. It means you don't have to fill it on the way out. But as we started bottoming out around here, if you're watching options during the sell-off, you are seeing the volume of $275 calls, $280 calls just skyrocketing, just out of control. Now that's great. I mean, if you got that trade, even if you just would have closed that trade and not carried until tomorrow, even though that would be, basically in the money, that trade was, generating hundreds of thousands of calls for those couple strikes, anywhere from 275 and 280. And there's a couple, there's tens of thousands just around there as well. And the puts were not increasing in a ratio that you saw maybe like last week, where it was, the puts and the calls were kind of keeping pace with each other. Now, to be fair, we were looking at those sets of calls and puts on a Friday. And tomorrow's Friday is going to be much more important, where it's going to be OPEX, and OPEX is going to be violent in the way that you don't expect. And the reason for that is because you have, a lot of expiring options before the market even opens. And those are going to be the SPX options. And then, of course, you're going to have all the single ticker and the ETF stuff throughout the rest of the day. And so we'll take a look at the last OPEX so we can kind of remind ourselves what that action could possibly look like. Why are things happening the way they are? And maybe, try our best to prepare for something. But, being pinned at 275 would be, I guess, okay, because that would kind of solidify a very solid gain for the week, which is a very impressive week. We went 10% on Monday alone, but we're generally flat for the entire rest of this week. So this was a great opportunity to really destroy the value of weekly options. So if you were long anytime in here, you might have got, if you had some really nice entries in the 260s, you would have really had a nice gain. But the reality is, like, this type of action, this choppiness, it kind of makes sense for because a lot of market makers are really caught off sides on Tesla because the move is so earlier on in the week. So if they were selling options on Friday of last week, they're really hurting right now, unless they sold a bunch of puts, right? But we know that the pricing would generally have been under 264, 265, bound in maybe the 262 area for a modest, like 5% gain on the week. If things look really, really good, that would have been a respectable move, and also within the estimated move for the week, which was expanded due to a lot of events happening. So the implied volatility expanded going into this week due to all the inflation reports and of course OPEX being tomorrow. But what we really want to do is there going to be a strong move tomorrow? Like, I think it would be best if the move was, if you're a market maker, like at least flat, like just be at least flat, unless all the puts that are being bought, today were for institutional types and the quote unquote smart money. But if you sold a bunch of options, you probably want to get this pricing down a little bit, because if you sold puts, I mean, I think you're probably fine, because you need to drop like 15% to start losing money on your puts that you sold. But if you sold calls, doing anything you could for this last day of the week to get the price down would kind of make sense. And you don't have to have the price come all the way down into the 260s and close there. You can just scare people out of their plays, and that way, you're less exposed as the day goes on. Like, as price starts dropping, people are going to start closing their puts or hitting stop losses. Maybe that's good if you're a market maker. And how do you do that? You just put a lot of short pressure on Tesla. And this pressure could just be market driven. We'll take a look at it right now. So as far as the chart goes, I think there's going to be a natural resistance at the 275 and to 280 area. And the move above that would be, I think, relatively surprising to me. But just know that the 280 area is going to be a gap. And see, that's the bottom of the gap. So this is the gap that we opened up the day after earnings, which was a very terrible day. But yeah, so we're kind of close to kind of maybe breaking even from that point on. It only took like 2 months, right? So 280 serves as a natural kind of barrier and a ceiling for the price. But could it actually just go much lower from the get-go? It could. Let's look at a reason why. Looking at the US 500, this is something that kind of trades like during the futures trading timeframes. So this can be open from basically like 8 p.m. at night until the next day. But what really matters is it kind of represents the SPX action that we might be seeing when it comes to around 9:15 tomorrow. 9:15 is going to be the expiry for AM options for the SPX. So if you don't know what that is, it's just that there is AM and PM options on option expirations day. So all these AM options will actually be, closed and settled out before the market opens. And then there's going to be another batch of SPX options that settle out after the close. So here is OPEX in August, so last month's OPEX, and let's kind of take a look at what it looked like. So during the course of the day, during the course of like the futures trading time, the market sold considerably until what? Let's see here. What was the low? Until around 8:45 a.m. And that was a drop from kind of like a recent high during the course of the evening of 0.84% on an overnight. 0.84%, that's pretty huge, right? But the reason for that is because, the quote unquote max pain for the AM options would have been much better if the price was lower. So, they can influence the price, get the price down in the pre-market, and get a better deal on the options that are going to be paid out or not paid out. And during the course of the day, the market rallied from an intraday low to a close. That was something like 0.81%, almost like flat from, day to day. So that could be similar type of action, meaning that, whatever the max pain is going to be for the SPX, which, I really don't know. I would say it's going to be lower than what it is now. But if whatever direction it's going over the course of the night, you can kind of understand that the direction where that price is going is to be just get to trying their best to get to max pain for all these AM options. And then if it's low, maybe that's a great time to go long, because the action wasn't really based off some type of fundamental change to the value of stocks in the stock market. And it's just really manipulation due to the vast amount of options that were expiring. So I'm not saying that to go long. I'm saying if you see the opportunity, going long at a cheaper price kind of makes sense. So be flexible in the morning, that if you see the price really high in the morning, it could be because the market is trying to get the price higher to, expire a bunch of puts out of the money or get people to be scared out of their puts, and vice versa. If the price starts drifting down over the course of the night, maybe this is the market just trying to get price down so the calls are not in the money that are going to be expiring before the market opens. You can use these opportunities to maybe, make a play, make a trade, or actually get in on a hedge if the price is really, really high. And you saw actually the aftermarket, you're seeing S&P 500 a little bit higher than the close. The higher it is, maybe the cheaper it is for people to get their hedges in as the options expire to tomorrow morning and throughout the day. So all of these things kind of make sense that most of the price action when it comes to OPEX is just really driven by whatever the options they're out there that are already open. And you saw a really good example of that today, actually, because there was a strong fight for 450. The bulls obviously were winning because it never really threatened going below 450, but they tried really, really hard towards the last hour of the day. You can see here from 3 o'clock, it dropped a little bit to it dropped 0.2%. I guess that's a lot for the S&P 500. But the gain on the day was much more than that. And so they're just trying to get to a point where at least trying to, get these 450s out of the money. Unfortunately, they were not successful. The bulls won that fight. But you can see how options really direct the direction of the market. And it's going to be even more so apparent tomorrow. So we recommend doing what? Kind of really watching where the options start, how they start evolving. Like I mentioned today, if you were watching Tesla's options as it was selling off in the morning, the calls were piling up to a rate that was like 2-to-1 when it comes to the puts. And you can look at that through even just like simple websites where you can look now. Let's take a look at the quote unquote max pain for Tesla in the market, so we can kind of try to figure out what's going to happen tomorrow. Now, this is going to change so dramatically that you can't use this as gospel, right? This is going to be a kind of a reference to what to kind of look for. You can see here the puts at 270 and 275, they don't get anywhere near the peaks of the 280s and 275. So automatically you can probably understand that there are so many more calls in the system than there is puts. But if there's going to be a quote unquote floor to pricing, you would hope that floor would be around 270. Anything below that and it starts selling off really hard, it's going to be rather difficult for you to get the pricing to go back up, because you're starting to see that the market is driven into that direction because of all their options exposure. They're going to do everything they can. They'll go super leverage to get Tesla really, really short. And sometimes if you see that kind of move happening, maybe you just ride that move along with them. Maybe you just, play like the market would play and just, get rid of the bias. And if it's going short, try to look at the options. Like, how are these really developing? Are there more puts being bought is there more put volume happening right now? And if that's the case, should you join in on them? I don't know. Obviously, I can't give you that advice, but tomorrow is a day that you really want to try to be like the market makers, because they're going to win no matter what. They have more money than all of us. They have ways to go super leverage more than any of us. So they're to get pricing to where they can. What can influence them? Like maybe dissuade them from doing that. Maybe some really good Tesla related news that could send the stock really sharply higher would make it more difficult for them to get the price lower if there's like an enthusiasm that's going on in the market. What could that enthusiasm be? Maybe the enthusiasm is going to be the United Auto Workers actually, start a strike at this evening sometime. I think they might announce certain targets around early evening, and by midnight, they can enact whatever plan they have and start a strike against any or all of the legacy auto manufacturers that they have membership in. Let's look at the S&P 500, because S&P 500 can be a little bit more important. Now, first things first, this is going to be the expiry for today. So this is not tomorrow's expiry, but you can see how there's S&P 500 has much more options in the system. We're talking millions. And using the volume chart, you can kind of see where the pricing is going to be kind of ping-ponging between. And you can just judge that by looking at the highest peaks of the green and red parts of this graph. And you see it's 449 and 450. That's going to be the battleground. Like, aside from some type of unanticipated event, these peaks are typically the battleground, as long as it evolves well into a couple hours into the day. Maybe at the beginning of the day, it might not be as accurate. But as more and more puts and calls are being positioned around whatever the prices for the S&P 500, that's going to basically create like your floor and ceiling that you can kind of anticipate. Number one, if there's a lot of calls, then maybe they're going to want to sell it. If there's a lot of puts, vice versa. And something to be aware of, since we trade Tesla maybe more than the S&P 500. If Tesla's really green, and I've talked about this before, if Tesla's really green, and you're watching the S&P 500's volume, maybe start skewing too high into their calls. What is a great way to get the index to come down? If you need the index to sell, we just sell the mega cap names, all the names that are just have a lot of weighting in the indices. We're talking the Apples, Microsoft, and Tesla, and that could really affect how Tesla's price action evolves during the course of the day. So a lot of bullishness could either just mean a cheap short to close out the week. It could also mean that they might need to sell it to get the S&P 500 or the NASDAQ to the perfect price, where they expire as many options out of the money as possible, puts and calls. You can see today the put call ratio was very, very high, and I guess that's not too surprising, right? Let's take a look at tomorrow's number. Let me just refresh this. It's kind of bugging out after I highlighted. Okay, so here's the 15th. And first things first, you can see the put call ratios. There's more calls than there are puts right now, but the volume hasn't had a chance to really flesh itself out. I think once we see a little bit more action in the morning, you can get a better idea of what's really going to happen. But right now, you can see there's a lot of people interested in the 450s, which would be that would be in the money already. And puts and calls are just around the 448, 49, 50. So depending on the open, like let's say they sell they're selling the futures market to try to get price down. Maybe that's a good opportunity to go long, because if you're seeing there's a lot of puts at the 448s, even at the 447, if there's a bunch of puts below 450, do they want to pay them out really? Is that something they're really interested in doing, unless it's their own that they bought? So if it's low in the morning, look for where there's a lot of puts at, and maybe pricing will end just slightly higher than the peak volume of puts that are being purchased. If it's vice versa, if it's a kind of like a very green pre-market And even as it goes into the expiration for SPX at around like 9:15 a.m., if the pricing doesn't really move, kind of take a look at, is there too many calls at 450? Let's say the market opens at like 451, but most of the calls are at 450 with not enough puts being at the same price. Something to think about as far as maybe it sells to get back under 450, so the 450s don't get paid out. We're currently sitting at a volume just today alone of something like 250,000 of these things. Something to be aware of. Now, we talk about a catalyst for a good move for Tesla overnight. Now, we don't really know how the UAW is going to really affect Tesla's price action, but here's a video of the UAW, the Ford CEO talking about the UAWs not willing to actually negotiate the contract. This is a post on X from Sawyer Merritt with an excerpt from CNBC.
John, thank you very much. Jim? We're a little over 7 hours away from the strike deadline. Where do things stand? You've made your most recent offer. What have you heard back from the UAW?
Well, everyone imagines we're in some room squirreled away doing this final negotiation, and that's what we would love for the last 2 weeks. But nothing's going on. We've received no counteroffer from Sean Fain in the UAW.
Nothing at all?
No.
How frustrated are you with this situation?
Well, we've never seen it before. In 80 years, we've always been able to work through these differences. Because we're always on the side of labor at Ford. We have the highest UAW headcount. We have more people than anyone, build more vehicles. We've never seen anything like this. It's frustrating because many of our team members have negotiated successfully on non-economic issues with the national negotiators. But somehow when we get to these marquee money issues, everything stops. And it's a mystery. We've been putting contracts and negotiating with ourselves since the 29th for 2 weeks. And we still have not had any kind of counteroffer for all those major things. And we're on the eve of one of the largest strikes in our history.
So that's kind of telling that the UAW isn't going to the negotiating table with Ford or maybe any other auto manufacturer just because, number one, maybe the original offers were insulting. We've talked about what those offers were. I think Ford is at 20, GM 18, Stellantis just a little below that, maybe 17%. But they didn't receive counter offers because they're not interested in lowering their ideal, increase in pay, which is 35 to 40%, including all the other benefits that we talked about yesterday. Now, Deepwater Management says that this is going to be a boon for Tesla. And you see Gene Munster on CNBC a couple times if you watch the shows there. He says Tesla is the winner in big auto labor talks. I want to just kind of preface this with the idea that maybe that's true. And maybe if there is a strike tonight that you can see some positive action from Tesla. But the reality is we don't really know how these auto manufacturers prepared for a possible strike. We do know, number one, that there is a lot of inventory on certain models for these auto manufacturers on the lots already. We kind of like joke around and make fun of it like, oh, look, there's like 100 days of supply on this particular vehicle. But that doesn't really bode well for the idea that Tesla's going to do better than the auto manufacturers if there's an auto manufacturer strike, if there is a bunch of inventory already having been made. Maybe that's what they did to prepare for this situation. Just try to pump out as many cars of whatever model they could. And yeah, some of them are EVs, and those EVs haven't been selling very well. But the vast majority of cars that these manufacturers sell are internal combustion engine vehicles. So what does Gene say, though? Big Auto is in a tight place when it comes to transitioning its business to electric. And the current UAW discussions will eventually result in a steep increase in costs that will further push them into the red. Tesla, however, can afford the pay raise and will emerge as the winner from the labor talks. So what they're saying is like, if whatever agreement they come out with, obviously there's going to be an increase in pay, an increase in benefits, which would be, of course, really affecting the bottom line of these auto manufacturers, because we already know that they offered about half of what the UAW is looking for. So, just off the bat, that's an increase of on the bottom line cost of a vehicle, maybe anywhere from like 2 to 3% based off the numbers they were willing to pay. Now, if they pay what the UAW wants to pay, that can be over 4, that can be over 5% per vehicle. And an increase in their bottom line that makes them, of course, less flexible with pricing and, of course, reducing their profitability. Now, we always talk about Tesla's profitability and gross margin, auto gross margins coming down, but this alone will bring the automotive sector more into that area of less already less margin, less than Tesla, and Tesla's going to look like a better play when you just think about auto stocks alone. The key takeaways from Gene's ideas here is that a strike is likely given, and the big three are still far apart. That's correct. We've talked about that a lot. Number two, even before the upcoming wage increase, the big three were paying their workers 38% more than comparable Tesla workers. That gap will likely increase. So, and when they say pay, we're talking about benefits, we're talking about pensions, we're talking about health, we're talking about retirement, we're talking about all these kind of different benefits that, Tesla isn't maybe responsible for because they're not unionized in their factories. Now, you might have to ask, so why is it okay? How are these, not just Tesla, but I mean, even just like Japanese and European manufacturers that are in the United States, a lot of these factories are not unionized. Of course, they might be in more Republican-ish states as well, like more towards the South. You'll see manufacturers sometimes, below the Dixie line, and that could maybe bode well for the perspective of like a union-free manufacturing facility. Tesla might compensate their workers with stock options and what have you. We've seen, Elon send emails out to people saying like, look, don't worry about the fluctuations of our stock. It's really, really volatile. In the long term, of course, that's all that really, really matters. So there's ways that Tesla is motivating their workers and paying them commensurate with, of course, their industry. Gene says in number 3 in his key takeaway, the EV losses will mount for the next 2 years plus for the big three as they transition to electric, benefiting Tesla. Now, I don't know how that directly benefits Tesla if their costs are going up, other than that fact that are they going bankrupt? Are they gonna not make as many EV cars and thus not being much of a competitor in that market? But these auto manufacturers are essentially being bailed out by the U.S. government. The government is giving them like billions of dollars in free cash to handle their labor dispute problems, handle transition to EV, giving their customers, of course, even Tesla customers, that like a tax credit on all their EV purchases. They're giving them money to create charging networks, and they're giving them money to create battery factories in the country. So yeah, I get that, but I just don't know. Of course, I don't think the government's going to let these manufacturers go bankrupt, and it would just be a really bad look going into an election year next year for Biden for something bad to really happen. Now, saying that, it also kind of brings up the point that if Biden hasn't really said anything about it as far as, you can tell, right? Because, when the union was talking about, having a public appearance with a politician, they chose Bernie Sanders instead of Biden. And Biden represents the Democratic Party, which of course is more union friendly, and the unions do usually vote for the Democrats. I think that's almost 100% a given. It is kind of just part of the principles of being a Democrat to think about the workers in that fashion. So if you want to take a look at this is on Deepwater Management /Tesla-UAW-strike, the potential for the strike, and it'll give you basically a rundown of what they're looking for. You can see how they want at least 35% in a wage increase, which is about which is about double what the big three players are willing to pay. And he kind of goes through all the labor cost comparisons so you can get a good idea of the issues that the UAW sees and how it could benefit Tesla. So take a look at that article if you're interested in understanding the possible action that's going to come later tonight. I would say though that if there is some kind of 11th hour agreement, some type of compromise before the deadline to go on strike, that we looked at the charts before for Ford, GM, and if you just kind of draw a horizontal range, they're very much at the bottom of a range that's been going back for a couple of years. So kind of just think about that. Like if you really want to short them, I can understand that could be a really good play, because we look at the action last night when we talked about the GM strike from 2019, where the price of the stock fell some 13%, was it? And maybe you can look at the Ford, the GM, and Stellantis patterns in their pricing and say, okay, this is just one big bear flag and it's about to break down and go to a low of a COVID low. I'm not saying it won't, but just know that when you're at the bottom of a range, it could break either way. But is it too sold? They haven't seen any gain in their share value for a very long time. We discussed that in another video, thinking that the market is not interested in being in these names because they really question their ability to transition to EVs in a successful manner. The whole deal. Let's go to some Tesla news before we get back to the charts. And this is going to be from Reuters. And Reuters came out with an interesting article really early in the morning, about 6:30 a.m. Eastern time, or 3:21 a.m. Pacific. It's titled "Tesla Reinvents Car Making with a Quiet Breakthrough." What is that breakthrough going to be? Well, the breakthrough is, let's read it, the first paragraph together. Tesla has combined a series of innovations to make a technological breakthrough that could transform the way it makes electric vehicles and help Elon Musk achieve his aim of halving production costs. 5 people familiar with the move set. Now, number one, who are these 5 people? And if those 5 people work for Tesla, I mean, they're going to find out. I mean, I can't imagine the team that's possibly working on a new gigapress is a team that they can't find 5 people that would have talked to the press. I'm just saying. It's very curious. And maybe this is more of a move for the manufacturers like an IDRA kind of leak. Maybe so. So the company typically uses, Tesla typically uses 6,000 to 9,000 ton gigapresses right now, with the 6,000 being for the front and back of the Model Y, the 9,000 being for the much larger front and back pieces, the castings for the Cybertruck. And the article continues to go on and say, in a bid to extend its lead, Tesla is closing in on an innovation that will allow it to die-cast nearly all of the complex underbody of an EV in one piece, rather than about 400 parts in a conventional car. Now, that might not really be 400 parts in like a comparable Model Y, since it uses a front and back gigacasting. But, compared to like a Model 3, maybe this does replace hundreds and hundreds of parts. You can read the rest of the article, but so from Terry from Carosoft Global. Carosoft had a really great video with Autoline that was posted on YouTube. I think you should give that a watch. It's kind of going around the circuit of the Tesla world. But on Autoline, which is a YouTube channel that focuses on traditional auto manufacturers, they just happened to talk to Carosoft Global about how Tesla designs their cars. But one of them, the president of Carosoft, says it's an enabler on steroids, and this is in regards to gigapresses. It has a huge implication for the industry, but it's a very challenging task. Castings are very hard to do, especially the bigger and more complicated they get. So the 5 people that spoke to this reporter were talking about like they were part of a team that were creating the possibility, exploring the possibility of having a press do what Elon has talked about in the past, where they can just almost complete the whole underpinnings of a car in one mold. And the writer of the article says this can bring the development of a car down to 1.5 to 2 years, where the rivals take about double that time. The 5 people said a single large frame combining the front and rear sections with the middle underbody where the batteries housed could be used in Tesla's small EV, which it aims to launch for the price tag of $25,000 by the middle of the decade. That kind of makes sense. You're trying to reduce the cost as much as possible. But also, when you think about the EV, if you saw my other videos, and if you're just around the Tesla world on Twitter, or X really, you saw pictures of friends in front of this cardboard mock-up of a 2-seater car. And you saw the sketches of that same car in Walter Isaacson's biography of Elon. So it was one of the images at the beginning of a chapter, kind of a sketch, a black and white sketch of the possible robotaxi. Now you can see how it is a 2-seater. There's no seats behind the front too, just a trunk, of course, probably above where the motor and some other components for the drivetrain will be. It would make sense, like if you could on a shorter car, actually explore the idea of casting the whole underbody, front, the battery tray, and the back in one piece. That makes so much more sense because the car is so much smaller. But it would still take a very large press to really, really make this happen. The press that they're thinking about, if you want to read the article, it's very long, but the press they're thinking about is anywhere from just over 16,600 tons of pressure. So it's a really cool article. It kind of goes into exploring how do you cast hollow portions of that underbody, because when you pull a die away from each other, you can't have any. It has to be a clean break apart. You can't have interlocking materials inside with hollow cavities. But they thought about using sand to create those cavities in the mold during the pressing. And the sand can just melt away, and then you'll have a hollow areas, which will reduce the weight of that mold. Instead of having really thick sections, you can have kind of like a honeycomb structure that provides the same rigidity with a lot less weight. And you can see that being used very strategically in the molds in the Model Y and in the Cybertruck. So really cool article. It's on Reuters. Check it out. And it's a nice, interesting read. I don't know how factual it is because, yeah, I mean, who are the 5 people talking? If it's Idro, that's going to be really, that's going to be really interesting. Anyways, let's go back to the charts to end the video. So we're looking at Tesla, and if you see positive action because there's a strike, I think you just use that opportunity. Like we talked about, like if you have the ability and you have a little margin to play with, I like to, like if Tesla's over like 1-2% in the pre-market, I buy like, you know, a couple hundred shares of TSLQ, which is the 1-to-1 inverse of Tesla. Could be a play. If the market's really, really high, because, you know, and you can kind of maybe gauge this around 9:15, or right after 9, if price starts selling or price getting bought up, that's the capitulation of the SPX 9:15 options that expire. Basically, they're hoping that most of those options are going to be closed at around anywhere from like 8:30 to 9 a.m. And the move after that's going to be more of a, like kind of a reversion to the mean, basically, or trying to get price back to where it organically should have been. That will give you the opportunity to maybe get an idea of the play that the market really wants to do. So if it's like, let's say the market is down, you know, 0.3% at 9 o'clock in the morning, and you start seeing it tick back up, and that's basically saying, okay, we got most people from the looks of it to get out of other options that are expiring in 15 minutes, and they're not going to affect the price and manipulate the market much further until maybe the open. And so that could be your sign, like, oh, maybe that's the bottom. And inverse of that, like maybe the market's up like 0.4% in the morning and it's 9 o'clock, and you start seeing it tick a little bit down. That could be your opportunity, especially if Tesla's working on a 1.8, 1.92 beta. A move like 3.3, 0.4% on the S&P 500 could look like, you know, 0.5 on Tesla, and 0.5% at this price could be, you know, considerable. So something to think about. And yeah, I don't know if there's anything much to talk about for now. I would say just, you know, hopefully that if there is a strike, and I don't want people to be out of work, but you know, Tesla benefits price action wise from that in some way. All right, guys, have a good night. Bye.